Welcome back, Alpha Hunters. The markets are closed for the week of June 30th, and we also close out the second quarter of 2023. So we're going to take a look at some quarterly data, some quarterly charts, and kind of get an understanding of where we are. But let's go ahead and start by looking at what went on this week. Monday had a nice little subtle gap down, nothing big, traded higher, kind of rolled over, traded a little bit sideways, ended the day negative, ended also at the lows, and that was the lows of the week was basically the close on Monday. Tuesday, come out, gap up, traded sideways a little bit for like the first hour or so, and then we just started running. And Tuesday we just ran essentially all day except for like the first hour and the last hour, but we ran pretty good amount for the middle part of that day in that trading session on Tuesday. Wednesday comes out, nice little gap down, traded sideways for about the first 45 minutes, nice little run up into midday, and then we had a pullback into the daily lows, went sideways, kind of at the open area for where we opened on Wednesday, and then a nice little pop right there towards the end of the day on Wednesday. Thursday, nice little subtle gap down, and then we just kind of choppily traded higher until the middle part of the day, and then a nice little pullback, and then we kind of rallied into the end of the day to close out kind of towards the highs of the day on the SPY. Friday morning, we had a monster of a gap up as we got some economic data Friday morning. The PCE came in right as expected, so the market really liked that, jumped up, and we traded higher, nice little subtle pullback, and then just kind of slowly grinded higher really until the late afternoon. And then once we got to the close, man, we saw a quick drop right there in like it's really the last 5 minutes of the close for the week. Now, Fed Chair Jerome Powell was out speaking Wednesday and Thursday, so there was some kind of on ease, kind of paying attention to maybe if he said anything. He didn't really say anything too much about policy or what they're looking for, but they are still very much watching inflation and probably going to have to start raising rates probably at the July meeting. And we'll look at the rates Fed Watch tool here a little bit later. But Friday morning, we did get that core PCE came in at 0.3%. It was expected to come in at 0.3%, which was down a little bit from the time prior at 0.4%. So that was pretty good, as the PCE is heavily watched by the Fed. Personal income ticked a little bit higher at 0.4% compared to the forecast of 0.3%, and personal spending came down a little bit compared to forecasts of 0.1% compared to 0.2%. So taking a look here at sector performance for the week, you can see that utilities, healthcare, and staples, all of the defensive type sectors, were definitely underperforming for the week. Then you also had XLC, the communications area, which holds Google and Meta, underperforming for the week. And then the outperformers for the week, the XLY, XLF, and the XLK, which is discretionaries, financials, and tech. And the major outperformers for the week, industrials, materials, real estate, and energies. Now you take a look here at real estate, and it had a pretty good week, but man, it was getting absolutely slaughtered for most of the day Friday. When I actually ended the live stream, they were down really pretty sharply, and then you can see in the last hour, they rose quite rapidly, almost getting back up to where they opened on Friday, but not quite. So yeah, quite an impressive move there late in the day on Friday for real estate. Take a look here at the weekly federal balance sheet update, and it did come down another week, 2.5%. So I think that's 2 weeks in a row. It came down to about 2.5%, but it's been down now 3 weeks in a row. So even the Fed is fading this rally. The VIX on the week, we had a nice little higher open on Monday and then kind of trade lower. Now, a lot of that probably open on Monday was probably a lot to do with, Jerome Powell's going to be out talking for 2 days this week. So they, a little bit higher open there on the VIX, but it definitely did trade lower basically every day until we get to Friday. Now, the Friday, we saw that market sell off right there at the end of the day. I'd imagine that has a lot to do with a little bit of a bullish activity here right at the end of the day. You can see at the last 20 minutes, the VIX just really popping there. It was down pretty good, but yeah, nice little pop there right at the end of the day on the VIX. The DXY, the dollar index, nice little subtle pullback Monday, Tuesday, nice pop Wednesday, Thursday, nice little continuation early Friday, and then when we got the data early Friday morning, it dropped pretty good. I don't know what is going to happen here. It's kind of, to me, it's in no man's land. If we get above Friday's high, it's going to go higher. If it gets below Friday's low, most likely it's just going to be trending in the lower direction. Because I did like how it broke and pushed higher Wednesday, Thursday, but then that Friday reversal came back down. Nice little bearish engulfing there on Friday. 10-year yield rates, nice little continuation sideways that we've seen really over the previous several weeks, Monday, Tuesday, and Wednesday. And then Thursday, man, we get the explosion higher. Took actually out this high back from May 26th on Thursday, didn't hold it. And then we had a continuation higher Friday, but it came back down with the data that got announced Friday morning. So I would imagine this probably does continue to push just because Thursday movement looks really strong. So I'd imagine we probably do continue to push higher there on the 10-year yield. Taking a look here at the 10 and 2 inversion yield, and we are getting back down really close to taking out those March lows on this inversion yield. So I'd imagine it probably happens next week. I'd probably be more surprised if we don't take it out next week. And that will then push the 10 and 2 inversion into further territory where it hasn't been in the past several decades. So historical moves in the markets over the past couple of years. Taking a look here at the GLD, the gold trust. We had a continuation of that breakdown that we were kind of seeing last week. And we got to a spot on Thursday where we barely opened below this low where we had a gap up back when, the regional banking issue was going on. So once we kind of gap below that on Thursday, then we saw gold GLD rally. It kind of just came up into the moving averages on Friday. I wouldn't be looking to buy this. I would actually be looking to probably get out or be bearish on the GLD, especially as it came up into these moving averages. I believe it's at least going to come down to 174, probably just come fill this gap at a bare minimum. If it doesn't come down to the 200 or even come out, take out this double bottom that it put in back in February, early March. The HYG, the high yield corporate bonds, well, last week had a huge crush off. This week had a huge run up. So who knows what's going on here? I don't know, because the huge run up that we had this week, nice extension on Wednesday, but gap down, kind of undid a lot of that on Wednesday, but kind of pulled back into the moving averages, got back above the moving averages on the week, and then kind of extended out on Friday, got above the high that we put in just a couple of weeks ago, but didn't hold it, didn't close it, so we've got a nice little wick up there. I don't know. I don't know. If you're wanting to be bullish here, you're definitely wanting to get above these April kind of highs and wicks that we put in. The LQD, the investment grade side of the bonds, nice little sideways movement early Wednesday, nice little push higher, kind of close at the high where it's been over the previous couple of weeks. Thursday comes out, gaps down, lower wick, huge lower wick, nice volume outflow that came in. And then Friday we gap back up, nice little abandoned baby kind of forming out there, and then pushed higher back up to those weekly highs that we had kind of been in over the past couple of weeks. So Wednesday and Friday, back up at those weekly highs, but then Thursday taking out some weekly lows. So yeah, so we're seeing some pretty good volatility out there, and some of these bonds just all over the place. They're trying to make sense of what's going on with the rates and what the equity markets are doing, but they're not really buying into the whole run up and bullish narrative. You can tell because they just haven't been performing all that well over the past few months. All right, so unlike last week where we saw a whole bunch of selling of options out there, we definitely saw just everything was getting bought up, calls and puts across all expirations. Now you can see a lot of put buying out here in August and September, so I want you to keep that in mind. I'm going to show you something here on the structure of those expirations as well. But yeah, we got a huge one coming up in July. That's going to be the monthly, July 21st, but nothing out of the normal, just a lot of put buying out here for August and September, which are going to be the next two monthlies after July. All right, taking a look here at the July 21st expiration, and just want to look at the structure here. And we do have a huge put wall around 420. Okay, so keep that in mind. Around 420, huge put wall, or basically at 420, there's a huge put wall, but you got a lot of other spikes around. So just keep that in mind. July 21st, the monthly expirations, big put wall, 420. Looking out to August 18th, the monthlies for August, and we have a pretty good put wall at 410. Now, not to say that we don't have a pretty good put wall at 420, 418, 415, and also 400, but the largest one out there currently is at 410. And then the structure for September 15th, you have a huge put wall out here at 400s. So this is going to be rather important when I talk about the game plan. But yeah, that 400 huge put wall there in September. Got also a nice decent one at 415. Not too crazy, but there is a pretty good amount of options on the put side there at 415. All right, take a look here at the Fed watch tool for rates going forward. July, getting a little bit more locked in that we are going to be raising at least a quarter point. And then for September, looks like we are going to be holding at that quarter point higher, and it's getting a little bit more locked in. Last week we were at like 65%. This week we're at 68%. So ticking up there, even more steady for September to be a little bit higher of a hold. And then even for November, it's also starting to be a little bit higher. Now, what's interesting is that this week we actually saw another rate hike actually tick quite a bit higher compared to last week. Last week we were like 18% to have another rate increase in November, but this week it's a 34%. So quite a substantial move up week over week on another rate hike in November. Then you can see here the odds for December, a little bit higher of a rate hold, 25 basis point higher on our current level, and then quite a bit of an increase of a 50 basis point increase from our current level. So last week it was at 12%. This week it is at 30%. Quite a bit of move there week over week. And this is the one thing that's kind of interesting, because you remember back a couple months ago, we were seeing a whole bunch of cuts July, September, November, December. But as the market rally has gone here over the past really about month or two, we have seen the rates actually climb quite a bit going out for the end of this year, even going into next year. But the market isn't really responding to it yet. The bonds are. Bonds are not really doing much. The equity side is not really responding to it. So we'll see what happens going forward. So can anybody tell me what big tech stock is above the high that were put in back in late 2021 or early 2022? And if you said AAPL, you would be correct. So taking a look here at AAPL, I'm going to zoom out here and you can see clearly above that high that it put in either late 2021 or early 2022. But the reason why I'm kind of showing you this is there is a massive over concentration in the market, and one where I can see AAPL is going to be underperforming for quite a substantial amount of time going forward, like years. AAPL will probably be underperforming. So I just wanted to bring that up. But I'm going to run through a few and just kind of show you kind of what I'm talking about. Looking here at Microsoft, Microsoft actually did gap up over the high it put in back in November of 21, but it did quickly fade once it gapped above that a couple weeks back. So it got up there, but it hasn't been trading up above it like AAPL has. Taking a look here at Alphabet. Alphabet's not even close to those levels, and I still think Alphabet's probably one of the best bearish plays out there in the market. Amazon, not even close. It hasn't even gotten close back to, you know, the highs it put in back in late 2021. Meta also hasn't really gotten close back to the highs that it put in back in 2021. It topped out back in September of 2021. So yeah, it's not that close. I mean, it's had quite a bit of a run this year, but it's not that close really even yet. Netflix is another one, isn't really even close back to those highs. So I just wanted to run through a few of those big time tech companies that, you know, had been the leaders of the market for really over the past really 10 to 15 years, but we aren't seeing all of them back up towards all-time high type area. We're just really seeing AAPL. Now, Microsoft's also up there, but AAPL has been making new all-time highs like every day. And you just got to wonder if they're really going to be able to deliver on the future. Here's another stock I want to briefly talk about, Nike, NKE. And there's not too much I really want to talk about here, other than the fact that it reported good revenue, but bad earnings. And this is what a lot of people have been talking about that we saw in 2022. And this is something that I think will be continuing to come into earnings season, especially as we saw in 2022, as we saw margin compression. And that was something that Nike even mentioned on their earnings, was that they had a hard time with margins. So as we get into the new earnings season, it's going to be starting the second week of July. Will companies live up to the earnings and margins? All right, taking a look here at the RSP, the equal weight SP 500. Nice move, breaking above the high that it kind of put in back in June the 16th. Took it out by 13 pennies. But I don't really know if I would be looking to continue on the bullish move here, as it's still at that kind of resistance level area, even though it did take out and make a little bit of a new high. I don't like it, and I'm going to explain why really when I get to the Qs. The DIA, the Dow Jones, hasn't gotten back up to its mid-June high. Getting kind of close, but nice little gap up there on Friday. Yeah, I don't know. I would just stay away from the Dow right now. I mean, until it kind of clears out above this whole kind of resistance area, basically it would need to get above about 350. Make sure it clears out, and then look out for it to come back down, kind of retest into this area, and then look for the continuation. But yeah, I couldn't suggest really getting it now because I mean it could very much just slowly die away here going forward. The IWM. Now last week I kind of mentioned that hey, this would be a really solid spot to be buying it, as we did break out a few weeks back in early June. It came up to this resistance area that we had back in November, December. It came back down, retested into this upper wick back from May 23rd. And I said, hey, you know what? If you're looking for it, might not be a bad spot. If you got the breakout, this is just the retest into those highs. I would look to probably just ride it back up. It did outperform even what I kind of thought it would do this week. And it is kind of at that high area again. I wouldn't really be looking to be bullish here, but I also couldn't really be recommended to be bearish either. I'm going to quickly look here at the SPY real quick, and then I'm going to look at the Qs, and I'm going to come back to the SPY. But the SPY actually did break above the mid-June high that it actually did put in back on June of 15th. Put in a high on that day of 443.90. Today we got up to 444.30, so we took it out by about 40 cents. And that is the move I have been looking for. And if you've been following, you know I've been looking for this move. As the Qs did not get above that high that it put in back on June the 16th. It didn't even get above the high that it put in on June the 15th. So this is what I've been looking for, where the SPY made a new high off of a pullback, right? The SPY made the new high. It wasn't much of one. And I do expect the SPY to probably trade a little bit higher, maybe early next week on Monday. But after that, really watch the Qs, because if the Qs don't get going on Monday and the Qs now have made a lower high and they start to move lower, and they take out this low that we put in early this week on Monday, that is now a change of trend. And the Qs, they topped out first when we topped out in 2021, at the end of 2021 and beginning of 2022, right? I mean, the Qs topped out, when was it? November, I believe it was November 22nd. And if you remember, the SPY actually topped out on January the 4th, right? So that was the change of trend that we saw back then. And if you go look at the COVID bottom, the closing lows in March of 2020, the Qs actually had a higher closing low when the SPY actually made a lower closing low. They actually did both break down and make a lower low intraday, but the Qs actually stopped having lower closes on, I believe it was March the 16th. But the SPY had its low close on March the 23rd. So this is very important as we go into next week, and this is probably the most important thing I would be watching, is the Qs, and if we continue to push higher and take out the high that we put in back on June the 16th. I cannot stress this enough. This is very important. Be watching the Qs, be watching the Qs, be watching the Qs. Especially if on Monday, if the SPY comes out and trades just a little bit higher, just pushes a little bit higher, maybe makes a run up to 445, doesn't really make a significant move higher, but it does trade a little bit higher. And the Qs are maybe even flat, up a little bit, but marginal, not as much as the SPY, or maybe even down. And if they're down Monday and Tuesday and the SPY is kind of flat or maybe even a little bit up, I would be very cautious on the market. All right, looking here at the 3-month chart, or really a 1-quarter chart. And I really haven't looked at this in the past couple of quarters, but we see that we've had 3 straight quarters of bullishness, really 9 months. And why I'm really kind of bringing this up, because, well, the open of this past quarter that just closed back in April, the open was 408.85. Now, if you remember back to the structure that we are going to have for the monthly expirations going forward, well, you know there's a big one for July at 420. There's a pretty big one in August at 410. And then there's a pretty large one in September at 400. Why that is important is because I don't think we need to get crushed. We can just have a slow pullback over this quarter. And if we have a bearish engulfing this quarter, quarter 3 coming up over quarter 2, then that sets up a really bad precedent going into the end of the year, maybe even early next year, to make a run back down to those October lows. So really kind of going forward, I'm not expecting a whole lot of crush city. I'm really not. And I really have a hard time thinking that we're going to be below 420 really by July 21st. options expiration, really because I don't see too many big catalysts probably procking us to be back below 420 by then. But the week after July 21st, those monthly expirations for July is going to be all of the big tech companies going to be reporting earnings the week of the 24th through the 28th. So we're going to have a big week, the fourth week of July here coming up. And if margins don't hold up and we continue to see rates push higher, equities might just start deteriorating as we push further into July and as we get further into earnings season. So really, that's kind of my game plan going forward. We could just have a slow die off this quarter, and if we get back below really this 408.50 number roughly, so if we get back below 408 by the end of September, that would be a bearish engulfing on a quarterly time frame. So just kind of keep that in mind. But really, the most important thing to be watching the week going forward is the Qs, and if they don't push and make a new high over that mid-June timeframe, especially if they're not participating on Monday and the SPY is continuing to push maybe just a little bit higher. Also, remember Tuesday, the markets are going to be closed in the US. So Alpha Hunters, enjoy your funky long weekend and take care.